Welcome back, everyone. Next up, we have Electrovaya Inc. It trades on the OTCQB under the symbol EFLVF and on the TSX under the symbol EFL, and is a pioneering leader in the global energy transformation, focused on contributing to the prevention of climate change by supplying safe and long-lasting lithium-ion batteries without compromising energy and power. The company has extensive IP and designs, develops and manufactures proprietary lithium-ion batteries, battery systems, and battery-related products for energy storage, clean energy transportation, and other specialized applications. Please welcome its CEO, Raj Das Gupta. Welcome, Raj.
Thanks, Anna. Thanks for having us here this afternoon. It's a pleasure to be at this conference, and I'll be speaking with the audience about Electrovaya's approach to lithium-ion batteries and why we're an interesting company. So Electrovaya is, as Anna just mentioned, we're publicly listed on the Toronto Stock Exchange and the OTCQB. So we'll be going through a fair number of forward-looking statements and forward-looking views on the company. So we'll take this as read. The company is also in the midst of a NASDAQ uplisting process, which isn't guaranteed, but we are optimistic that it will go through. So who is Electrovaya? Electrovaya is a lithium-ion battery manufacturing and technology company. So we have aspects of both manufacturing batteries and battery systems, as well as developing next-generation cutting-edge lithium-ion battery technologies, as well as commercializing those technologies. Currently, our mission is to take a significant part of the energy transition, and our contribution to that will be through safer and better batteries. We use those words carefully. By safer, we have technologies which provide much higher levels of safety for lithium-ion batteries, especially with regards to our ceramic separator technology. And by better, we have the longest cycling battery technology in the industry. And this is the number of charge-discharge cycles you can do on a battery before it reaches its end of life. And that advantage, both on safety and on cycle life, is what we've built our business around. So Electrovaya has been in the battery space for some time. We originally were very focused on automotive applications, and we had made some interesting developments in that area. We had partnered, for instance, with Chrysler, later with Daimler on their electric vehicle programs. And while we developed a lot of interesting technology during that time and really learned how to make commercialized battery systems, it was an extremely competitive environment, one where we did lose quite a lot of money. And we decided around 2018 that we would pivot and focus on commercial applications. Again, at that similar timing, we had developed this very long cycle life lithium-ion battery technology, which we currently call the Infinity Battery Platform. And we said, while that technology could be, of course, be applied to the automotive space, that sector won't necessarily pay a premium for this type of performance. So we went after really heavy-duty applications. Material handling was top of that list because these are applications where the battery systems will be used 24/7 in many cases and operate multiple cycles per day, as opposed to the automotive space where you're doing a cycle in a week is a typical usage profile. That pivot was successful. We now have the largest OEM in the sector is our partner. We have 10% of the Fortune 100 list using our battery systems. Many of the largest retailers in the country, and a growing list of customers and deployments of the battery system in that segment. We're expanding our production footprint in the United States with a gigafactory in upstate New York. And we're also going to be launching products designed for electric buses and electric trucks, as well as energy storage systems. So we're starting to diversify our market segments. A little further about the company, we have operations both in Canada and two sites, one where we're producing, assembling the battery systems, and the second is our Electrovaya Lab site, which is dedicated to the development of next generation solid state batteries. And in the US, in Jamestown, New York, that'll be our US headquarters, with which ultimately will be our largest site, and it currently will be taking the largest capital investments as well. So Electrovaya has been successful in the battery space by relying on our continuous innovation. So we have well over 100 patents. The pivot to the heavy-duty segment has been successful. We have been doubling revenue for the last several years. So fiscal 21, we did 11 million in revenue. Fiscal 22, we did just about 20 million US in revenue. And fiscal 23, our guidance is 42 million. So that's significant growth, which we plan to continue to maintain over 2024 and beyond. So as a battery company, if you've been watching the battery space, it's fairly rare for companies to be profitable. Electrovaya crossed that chasm last quarter, where we did 10.5 million in revenue and showed both EBITDA and net profit. So we plan on continuing that trend as we continue our growth. So what do we make? We make, fundamentally, our most important product is our cell, which is the longest cycling cell in the industry with very high levels of safety. We take those cells, make them into modules, and then finally battery systems or packs, and that's what we primarily sell. So what segments are we targeting? Well, really, we're targeting segments that can take advantage of our performance advantage. And that is the heavy-duty segment. Electric forklifts, robots is our current mainstay. Electric buses and trucks, something that we're starting to get into. And then, of course, energy storage. That's a very interesting high-growth application where the more you use the batteries, the more money you can make, and that really it follows our strong suit. Now, who's using the batteries? Well, really the Fortune 500 and the Fortune 100 list are the type of end users of our battery systems. Our OEM partners, the announced ones would be Raymond and Jabil, but we have a larger list of companies that we're working with. And it's really growing quite quickly, especially in the material handling and robotics. Now, the technology is been proven. So we have deployed the ceramic separator technology in about 20,000 passenger vehicles. Not one of those vehicles has had a battery safety incident. And more recently, in the last 5 years, we've deployed them in thousands of material handling and robotic vehicles. Again, not a single one has had any battery safety incidents. And more interesting is the batteries themselves have not really been degrading. So the battery performance after 4 and 5 years of continuous heavy-duty operation at a Fortune 100 retailer have shown essentially negligible degradation on battery performance. This is also demonstrated with third-party lab testing. Here you've got, this is testing from DNV's lab in Rochester, New York, where they benchmarked our cells against the best of the industry and demonstrated that what we were telling them was true, which was Electrovaya's cycle life performance is at least a 4x over the competition, and really is a multi-million mile battery system before it reaches end of life. Just putting that in perspective with regards to miles, in an electric vehicle, you'd be getting over 3 million miles in performance before the batteries reach their end of life. On the safety side, fundamentally, why are Electrovaya batteries safer? Well, it's due to the ceramic separator technology that we have. We have over 30 patents just related to the ceramic separator tech. Here you can see a Electrovaya separator compared to the best of the industry, which would be a ceramic coated polymer separator. And as temperatures increase, you can see that the industry-leading separators will start to shrink. And when that happens, you would obviously have your positive and negative electrodes touching one another. So the purpose of a battery separator is to keep the positive and negative electrodes apart and preventing short circuits. And when things go wrong, temperatures can go up, and that's when standard battery separators start to fail, and where Electrovaya's will continue to maintain their structural and geometric stability. And that's fundamentally why Electrovaya's batteries are much safer. This translates to the battery system level, where we've done fire propagation testing for our OEM partners as well as UL certifications, and have demonstrated that our cells essentially this technology can essentially prevent fire propagation in the battery system. So it's very, very valuable technology for increasing the safety of the batteries. Now, where have we deployed these? Initially, of course, material handling was our first foray and has been extremely successful. Over 40 battery models for various vehicle types. That's continuing to expand. We're also supplying battery systems for a few robotic and AGV applications. And we're later this year, we're launching our next generation high voltage packs, which are optimized for bus and truck applications. And next year, we're going to continue to further grow our material handling footprint with basically we'll be able to cover the entire marketplace for material handling vehicles, presence for AGV systems. Now, why do large companies pick our technology? Well, fundamentally, it's because we can provide a lower cost of ownership. So for a user for a customer who's using the batteries extensively, like in a forklift or even an electric bus or truck application, the total cost of ownership is what they look for. So commercial applications, it's not necessarily just about the CapEx, but the total cost of ownership is how they make their purchasing decisions. And that's where we really shine. So that's avoiding having to augment or replace batteries after 4 or 5 years of heavy use. That's demonstrated with our performance at the Walmart, which is that bar graph there, where after 4 years, there's no degradation on the battery system. So you no longer have to replace these batteries. We're very excited about launching our high voltage systems, which really will expand our market potential significantly. These are designed specifically for electric bus and truck applications. They are also a good fit for our technology. In an electric bus application, they are targeting 12-year life for the battery systems, and that's something that most battery companies cannot provide, and something that Electrovaya can. So we're very excited about the long-term potential in these new markets. We've been investing in upgrading our facilities through automation, and I've recently installed a cutting-edge automated system for our high-voltage packs. Now I'll delve very briefly into some next-generation technologies, specifically our solid-state battery work. So what is a solid-state battery? A solid-state battery is often referred to as the holy grail of battery technology. There have been a number of companies around the world working on solid-state batteries. No one to date has really commercialized the use of solid-state batteries in a major way. But what a solid-state battery provides is almost double the energy density of a lithium-ion battery, so it would double the range of the vehicle or half the weight of the battery pack. And that is in a very position for all applications, especially high-performance vehicles, aircraft, and the list goes on. So essentially what you would have is a battery that replaces the current anode graphite with pure lithium, which has a significantly higher energy density, and replacing the liquid electrolyte with solid electrolyte, which is stable with lithium. You've seen in my previous slides, Electrovaya is an expert with regards to ceramic separator technology. We have been one of few, if the only company, to commercialize ceramic separator technology in any significant fashion. And I think that provides us a very good starting point for our effort, which also is built around a ceramic separator. In this case, that ceramic material that we're producing in-house is ionically conducting and can effectively replace the bulk of liquid electrolyte. The challenges with solid-state batteries have really been around manufacturability. That has been the major challenge. It's one thing for companies to demonstrate a solid-state battery that's been produced in the lab, and another to scale it for manufacturability for commercial use and to make it at a cost-effective price. And that is something that I believe our approach can satisfy. We are only investigating materials and approaches that can be scaled. And while we haven't completed this development yet, we're very, very excited that the outcome could be very positive. I'll touch briefly about our U.S. expansion plans, and that's really around our Jamestown Gigafactory. So Electrovaya recently acquired this 52-acre site in Jamestown, New York. Has an existing building on it, which was previously used for manufacturing of electronic parts and is well suited to lithium-ion battery production. We're currently working with a government-backed lending institution where we have a term sheet. We haven't quite executed on this as yet, but we are targeting something in the next month or two, which will provide funding, the bulk of the funding, to outfit the facility with lithium-ion battery. We will also be assembling battery packs here towards the end of this year, and essentially reshoring what we currently produce in Asia. So we're very excited about bringing back our manufacturing back to North America, which is where it all started in when Electrovaya was founded. So we are targeting Q1 2025 to start cell assembly, but earlier dates for module and pack assembly. Why did we select Jamestown, New York? Well, first of all, this site was very attractive because of the existing building. But more importantly, the site is located close to our existing operations, close to our OEM Partners operations, and can leverage low-cost electricity that's produced 100% hydroelectric green electricity. We will also be able to leverage the Inflation Reduction Act incentives for both cell and module manufacturing, which can become quite substantial. And we're expecting this reshoring to ultimately improve our gross margins by up to 5%. As I mentioned at the start, Electrovaya is on a fast growth trajectory. So 2021, we did 11 million in revenue, followed by about 20 million last year, and we're on course to more than double it this year. And we're very focused at Electrovaya on the bottom line and maintaining profitability as we continue to grow. We have a young team at Electrovaya. I've been with the company for 14 years, but we have a very adept and hardworking team to support this growth trajectory. We have started hiring processes in New York State, and we've been very fortunate to see great candidates there. And with that, I'd be delighted to take any questions from the audience.
Great job, Raj. Yes, we've got some questions for you. First of all, Bruce Russell wants you to explain, who are your customer base? Who are they?
So we have, first of all, we have OEM partnerships, and the OEM partnerships are with the leading in the material handling segment, the leading OEM in that space. So Toyota Group as a whole controls over 50% market share in the North American market, at least. We're proud to be partners with them. On the end user base, we couldn't have a better list of customers. So as I mentioned, we have at least 10 Fortune 100 companies using our battery systems, and this includes the major retailers, both e-commerce and brick and mortar retailers. And that's where we're seeing significant growth. We're also seeing some growth in the food and beverage segment and general third-party logistics groups, Sleeva Logistics. So very blue chip customer base with respect to material handling. That customer base is also helping us get into new markets. So I'll give you an example. One of those customers has energy storage projects, which they like Electrovaya's battery technology because it's safe and cycle along a number of cycles, and they know it's ideal for energy storage. So we're using that that relationship to bring us into the energy storage market as well.
Great, thank you for that. Joe Holland wants you to explain how your product, he wants you to clarify, your product is longer lasting and safer than the competition. So what does it take to get mass market adoption?
So it is longer. Yeah, it's longer lasting in terms of cycles, and it's significantly safer. It is slightly more expensive on a CapEx view. So you don't necessarily need our technology. So we're very focused on the heavy duty segment where they do have a need for a battery system that's both safer and can cycle longer. Those segments on their own are massive and growing rapidly. So I'll give you an example on the bus segment, the commercial transit bus that you see on your streets every day. The segment is going to go through a rapid electrification. And currently, bus OEMs I think they're around 10% adoption rate for electric. That's going to go over 50% very soon. So Electrovaya's goal is to get into that market segment, grow our manufacturing footprint in Jamestown to supply both the material handling segment as well as electric bus and energy storage.
Great, thank you for that. We have a question from Eric Ortega. He asks, are you at break even currently on income per share, and when would you project going positive?
So last quarter we were net positive. So we had roughly and we have relatively high debt costs. So I think we were at about 8% EBITDA, roughly around there. So we made a small net profit. So we have crossed that chasm and intend to remain on that side of the with a positive number in front of us going forward.
And Tom Little says, you mentioned earlier that EV adoption might be a challenge. What would the reason be for that? And if it's better performing and safer than your competition, why would you think that big EVs would not be customers at this point?
So we have had a lot of experience with the EV manufacturers. So the Daimler Smart Car being the last experience. And we found while they appreciated the performance benefits are at a cell level, which is what automakers look for, we are at a CapEx a bit more expensive. And that's due to the fact that we produce it at a smaller volume, as well as the ceramic separator is, of course, more expensive than a polymer separator. And that price difference is what makes it, if we were to a battery for an automotive passenger vehicle application, we would be looking at margins margins under 5%. If we can sell that same solution to a material handling or heavy-duty vehicle application, we can get margins north of 25%. So that's really why our focus is in that direction.
Perfect. And Keith wants you to clarify, is the cost to replace your batteries cheaper than your competition?
Well, I hope there is no need to replace our batteries. So we call it an infinity battery technology for a reason. This battery is going to last 15, 20 plus years. And because of that longevity, you will be, instead of replacing this battery, you'll be repurposing it at the most, and it can continue to be used.
And what is the cost to produce a superior battery versus the competition that's currently out there?
This is it's a good question. I believe we're probably maybe a 15% cost at the most, maybe 10% cost over our competition. And a big portion of that is due to the volumes that we produce. So as we continue to scale, I would say our technology will become pretty much on par with some of our competition.
And last question for you from Gail Miller. Where have your raw materials costs gone over the past 12 months? And do you see them having an effect on your margins at all?
So in 2022, there was a significant on some commodities, for instance, lithium carbonate. That did have an effect on some of our material costs, but that has been offset with price changes from us to our customers. So of course, there's going to be some variability in material costs, and there will be a lag between price changes. That said, for the most part, we're well hedged. We secure materials on an annual basis and can plan things fairly effectively. So we shouldn't be surprised by any major fluctuation in these commodity prices.
Great. Well, Raj, do you have any closing remarks for us?
No, it's a pleasure being here. It's my first emerging growth conference, and definitely a pleasure to be here.
Wonderful. Well, we hope you come back again and give us some updates.
Thank you.
All right, everyone, stay with us. We have an update from the OLB Group coming up next.